Good morning. Good afternoon. Boss ladies, happy Friday to everybody. I hope everyone's having an awesome day so far. As you know, Fridays are my favorite day, so I'm always pumped and jacked up to get the day started every Friday morning. So it was nice to see a little uptick in our business, right? Hopefully, some of you started picking up, got more activity, more people, more clients reaching out to you. Um, and making those initial contacts. So it was huge. I'm interested to hear not just how your week's been, but more importantly, how your August was, right? We just closed out August. Um, so we'll talk about some of those things as well. Um, Welcome to Creating Opportunities, where we discuss how Rocket Mortgage Local can join forces with you, boss ladies, and how we can kind of conquer your backyard and, where you're the ambassador of, right? So I'm here to support you in all those ways that I possibly can, and help you, pretty much help more people home to home ownership. Okay. That's our whole mission, is to welcome everyone home, because we feel like, as a company, Rocket feels that everyone should have an opportunity to own their own home versus renting, right? Because that's really where the beginning foundations of building your financial house begins, right? Is with your own home. So we want to get that out there. We want to teach that. We want to help as many people as we possibly can to achieve that goal, and you'll see that through some of the testimonies that I've got here in front of me, based off of some of the closings that I had this past month. And I'm just super excited to jump into this. Okay. So I'm your host, Bill Haga, Executive Loan Officer with Rocket Mortgage Local. Always stress local because our pricing is always a good 1% to 1.25% better. I mean, on a $500,000 home, that's 5,000 plus, $1,000 that's cheaper. Um, so that's huge. Speaking of rates and the cost of rates, guess what just happened this morning? Anybody? Anybody have any idea? Well, I'll tell you, rates dropped. Yes, the cost of rates dropped. In some instances, right, programs are always different. Each one of them have a different rate, different cost, that's associated with them. But we dropped in some scenarios up to 50 basis points. So that's huge. Um, so it's time, right? It's time to start buying. It's all we hear in the news. The rates are coming down. Rates are coming down. Well, we're starting to see that happening. The only thing that you know has tension out there is war. War is never any good, especially when it comes to rates. So 9 out of 10 times in that scenario, interest rates start to rise again. All right. So sometimes, when the iron's hot, you got to strike. So I'm telling everybody, now's the time. If you're looking to purchase, I mean, this weekend you should be out there like a champ, looking for your next home or your first home. Right. So let's get out there. Let's educate and be the ambassadors that you are already in your communities. All right. So today's topics, I want to cover some wins for the month of August and condos. Yes, condos. I love condos. Really didn't do a lot of condo business until I actually moved down to Alabama and in Gulf Shores and Orange Beach and down through there. There's a ton of them, right? We're going to get into conforming, or I should say, warrantable and non warrantable condos. So you know the difference between those. But we're going to dive into that piece. And I love condos, right? Condos, second homes, investment properties. This is where a lot of extra um, wins come in for us. Okay. But first, let's talk about the overall closings and wins that we had with our clients first. Okay. So I closed a VA loan. Our veteran, who's amazing, by the way, Marine, thank you so much. Appreciate you. Um, he got new orders. I mean, like, we're just going under contract. They asked for a 45-day close, 45-day close, um, until he got his new orders. His papers came in. He called me in somewhat of a panic, scared to know, how in the world that we are going to pull this off. He's under contract. I mean, you could just feel the stress oozing from him, right? So we talked through it. Um, I got on the phone with my processing team. We got a plan together, and that file ended up closing in 18 days. Right? We had 20. We had it scheduled for 20. The second that we got her clear to close, we were able to move it up, so he could at least spend, 1 or 2 nights in his new home before being departed. So that was a huge win for an amazing veteran of ours. Um, FHA, we use rent rewards. Okay, right? Rent rewards. If you're renting, we're giving you a credit. No one else is doing anything like that. But Rocket is, right? So we'll give up to a credit up to $5,000 just for renting. Right? This particular scenario, my client, we use rent rewards. We gave them they're renting for $2,800 a month, so we gave them a lender credit of $3,360. This was once again an FHA. They needed 3.5% down. That covered almost 1% of it. Okay, that was huge. Money was tight. I don't know. They couldn't get a gift from anyone. I mean, the only option was the rent rewards. I mean, that saved this deal. Or I shouldn't really say it saved it, but got the deal done, right? So that was huge. Um, Here's a conventional win. I love this 1.0 temporary buy down that's paid by Rocket. This thing's awesome. So conventional, right? Everyone's super competitive, getting shopped like crazy. Um, we locked the rate at 6.375 for the first 12 months. Our client's going to have a payment based off of an interest rate 5.375%. That's correct. 1% less than what's market value right now. Who doesn't want a lower rate? Who doesn't want a lower payment? I mean, I got a client who turned down they were going to make an offer on a house, and they're approved conventional. Um, and they could get the 1.0 buy down. So they were all steadfast about getting in there and getting that property secured. So we secured it with a verified approval letter. Okay. If you don't know by now, Rocket moved our underwriting from pretty much the end of the process up to the very front. So now every one of our files, if we can get them submitted, right? I mean, it's just like submitting a loan. You got to have all the documents. You got to have all your T's, all your I's dotted. I mean, it's a job. It's a lot of effort on our part in order to do this for every single client, but we're doing it now. Okay. So now if you got a underwritten client who's already been approved by the underwriter, I mean, the only things next is the title and the property. So we can close these loans in 20 days. That's super impressive. I don't know anyone else that's doing this in the market. All right. So that's a huge win. So that saved that client over $200 a month because of that 1% difference. Okay. And that's for 12 months. That's huge. It should take them right up to a refinance when rates are going to be well below where they're at now, right? I mean, President Trump's talking about rates need to be cut 1.5%, 2%, up to 3%. So I'm excited. I just can't wait until all this starts unfolding. Self-employed. Who out there is self-employed? All you boss ladies, all you ambassadors, right? You get a 1099. This is what I can do for you. All right. This is what I did for another realtor, good friend of mine. Been doing business with her for, I don't know, probably a good 15, 16 years. She's in the Chicago area. But listen to this. So her tax returns, right? 2 year tax returns averaged out. She's looking at $4,800 income per year or per month. All right. Not a lot to work with when you're trying to buy a house. You got autos that are taking care of, pulling some of that purchasing power down. But what we were able to do is go with her 12 months of personal bank statements. So within those bank statements, we added up all the deposits based off of her self employed income, right? There's some things that we can't include, transfers, things like that don't apply to the job. Okay. This is all about income coming in based off of what you're doing. All right. So at that point in time, I was able to use $12,800 of income versus 4,800. Are you kidding me? So imagine, because you're in this situation. I know boss ladies make money, and we love that, right? That's what we're here to do. We're here to help, and we're here to make money. I mean, we got our own bills, we got our own things to take care of. So when you've got an opportunity to show another self-employed client something like this is monumental. I mean, this is huge. Okay. So at this point in time, keep in mind on her $4,800, because she wanted to be, she wanted to kind of stay, somewhat within her means, but $4,800 wasn't even close to her means. 12,800 was the top of her mean, right? So instead of looking at a $350,000 house that she almost made an offer on before even contacting me, and then said, "No, wait a minute, I need to contact Bill and just see what he's got the offer." And thank God she did, because instead of buying that $350,000 house, she closed on a $560,000 house this morning. So congratulations, Amanda. Super happy for you. So that's what that self-employed bank statement program does. Okay, it opens up the purchasing power for your clients. All right. My brother was notorious, ran three businesses. I think he showed that he made like 25 grand, but lived in a, $500,000 house, drove nice vehicles, had boats, motorhomes, everything else. Right. So, yeah. And I use bank statements for him as well. All right. So educate, right? It's our responsibility to get this stuff out and educate our clients. All right. So that was huge, huge win. Let's talk about refinances, right? As rates continue to drop, more opportunities are going to happen here for clients for refinances. All right. I believe that we're pretty much leading the way in refinances as a company at this moment. Here's one for you. So, client was at a 7.5% interest rate. Okay. We dropped them down to 6.25. We took some cash out. We paid off a little over $47,000 of debt. That saved them over $1,800 a month. All right. They owed 22 years. We put them in a 15-year, and that's going to cut the 7 years of mortgage payments off on top of the savings that we already created per month. Right. So we just took that 1,800 bucks, putting $1,000 into a savings account, an investment account for retirement, right? Something that's going to make them some money. And then the rest of that, the $900 is going to overpay the mortgage every month. All right. That's the best way to cut years off, is to overpay it each month. All right. So those are some wins I wanted to talk about, um, based off of August production. And 2 minutes before coming live, I had a closing that just wrapped up. So I jumped on the phone because this is a pretty unique scenario. Gentleman's in Chicago, or from Chicago, I should say. He moved down to the Danville, Illinois area, and has had a pretty rough life. I mean, dad wasn't in the picture. Um, Mom faded in and out to the point where she's not even been seen for a while. Has his own family. Started a job just over a year ago. Some decent pay with the city of in this Illinois area, and so when I called him to make sure that he had keys in his hands, he was he couldn't even talk. He was just so amazed that we got him closed. So huge shout out, Andre. Super happy for you and your family. And so that's why we do this job, right? That's the exciting part. So he's now going to be able to build his foundation for his financial success moving forward because his family's going to sit there. He's going to make that mortgage payment. And as he pays down the mortgage, he's going to build equity. And as property values in his area continue to grow, he's going to build equity, right? So in the future, his plan is to take that equity out and rent the current house and then go buy him and his family another house. So now he has two houses that he's building equity on. His plan is once his kids get up to college age, he'll be able to pull cash out of either or both and be able to pay for their college. They'll be the first ones in his family to ever have the opportunity to go to college. So that's huge, right? We're making huge impacts in people's lives. All right, next topic. Let's go to condos. Once again, I love condos. Um, a lot of people think they're overly complicated, but let's keep things simple. All right, I like simple stuff. So let's go back to warrantable condos. That just means that they're approved by Fannie Mae and Freddie Mac for their loan programs. All right, we call those conventional programs. Non warrantable just means that there's something within that condo complex that doesn't quite meet Fannie and Freddie's guidelines. That's what makes them non warrantable. Okay, because they don't qualify for your normal conventional programs that Fannie and Freddie would eventually purchase. Okay, so there's multiple types of condos. Okay, so you have warrantable and non warrantable. Now we're going to unpack that a little more. All right, so there's a type A, which they just need a limited review, right? We talk about condo questionnaires. That's where that limited questionnaire form comes in. All right, it's normally a one pager, maybe a two pager max, but this is a complex that's already been approved by Fannie or Freddie or both. They have an occupancy rate of 75% to 90%. They don't have any timeshares. They don't have any, they're not considered a condo tell, nothing like that, right? Their HOA has everything in line based off of reserves and all the requirements that they need to meet. That's really the complexity of a condo because it's just not the building that's being approved, it's also the association that's getting approved. All right, and how they handle, their business. So it adds another layer, and that's why we have a condo team. So we have, I don't know how many, there's a number of people on this team to make sure that we're able to address every condo issue or concern that's out there. Okay. So that's what makes me very confident when I'm talking about condos and doing condo business with you, is because of the team that I have behind me. All right. They're stellar. All right. So a type B, once again, warrantable, right? It's approved by Fannie and Freddie, only they need a full review, right? So they've got a few more things going on within their complex. However, it still fits Fannie and Freddie guidelines. Okay. However, they need a full review, which is normally a 2 to 3 page condo questionnaire form to be filled out. All right. Once again, occupancies running 75 to 90%, already approved, ready to go. Okay. There's a list. Fannie Mae has a list of all the condos in the nation that are approved. Okay. We'll share that link with you. Actually, contact me for that link. There we go. So there's also a type C. A type C is a new condo project that is just like one stipulation away from being approved by Fannie and Freddie. Okay. The good thing is we can do all three of those. Okay. So we just open the door to this. This is one of the new things for us. So there's also a type V. All right. Type Vs are all the goofy stuff, like the timeshare stuff, the condo tells. Those types of properties fall within, that type V. We're not there yet. We don't have a lender for those particular condos, but I'm sure that moving forward, we're going to open that door as well so we can do more condo business. Okay. All right. So I mentioned that Fannie does have an approval, list, and we'll get that out to you based off of you requesting the information. Okay. All right. So just to address a couple other things, um, I know that in your areas, everyone has condos. All right. So this is another opportunity for us to kind of dive into your business, dive into your area, your backyard, if you will, and kind of look for opportunities that we can look to do together. Right. And grow your business, grow my business. Once again, it's all about helping more people home. So the more we can do, the more you're going to be known in your area, right? And if you're not quite at that status yet, then you're going to be soon because once again, these programs are amazing. All right. So here's some other ways that I can help make a difference within your business. All right. Remember, there's no more contingencies. If you have a seller that's trying to buy, but they got to sell their property first and it's contingent on selling that property, we all know how we feel about that. I've got the solution. Okay. So contact me if you've got those situations. Um, Keep in mind, we have the 1.0 buy down. Everyone wants a 1% rate below the market, and it's free. I mean, we're paying for that. In that scenario I gave you earlier, that was like I don't know, almost a $3,000 lender credit. Okay. That's huge, especially if you got someone that's sitting on the fence and not really, all rate conscious, not doing anything, not realizing the prices of houses are still going up while they're waiting to buy. All right. These are the people that we got to get this information in front of because they're going to become buyers once they know this. Okay. Um, Rent rewards. I mean, once again, we'll give up to a $5,000 lender credit just for someone renting. that, that still makes me laugh. I know this is Miranda's favorite one, but I'm just blown away. So, once again, in that scenario, that covered almost 1% of their closing cost for them. They didn't have the money. If it wasn't for that program, they they weren't going to purchase. That was just it. Bridge loans. We have bridge loans. So if you got a client that needs money, right, pull money out of their current house so they can go buy that second home, that investment property, I've got that too. Interest only options. We've got interest only options all the way down to a loan amount of 125,000 bucks. That's unheard of and huge. All right. Once again, condos, warrantable and non-warrantable. I can help you with those as well. All right. So this weekend, as you're going through your business and figuring out other opportunities and who to contact, think of these scenarios. Excuse me. Think about each one of these scenarios, and I promise you, you're going to come up with names of clients that you need to get back in contact with. Okay. Let's do that sooner than later, right? These rates are down. Now's the time to be getting this business. All right. So, most of my energy is going to be focused on pre approvals. Okay. We call them now verified approval letters. All right. Because they're getting underwritten. Once again, I want to stress this. and how important this is. When you're a buyer's agent and you're making an offer for your client and they just have your basic pre-approval, pre-qualification, whatever you want to say, right? Because in this day and age, I don't know who's pre-approving people without collecting all the documents that you need anyway up front, right? You need pay stubs, you need W-2s, tax returns, mortgage statements, tax bills, insurance. I mean, you need it all in order to truly evaluate and make the sound decision, because it's all about good information going into the system. So the system's always giving you accurate information coming out. Okay. So we really focus on making sure all the data is as accurate as possible. I mean, right down to, start dates and end dates for employment. Why? Because if you've got a gap, there could be an issue. You may need to go back 2 more years in order to get that history, right? And if you don't know that up front, that's going to be an issue down the road. Okay, it definitely could be. It could stop that loan from closing. All right. So these are the things that we're trying to prevent by moving underwriting to the front of the line versus toward the back. This should give you all the confidence in the world to the point where you're waving your verified approval letter. I'm coming to the table. This is my offer. Why? Because I've already been approved. The only thing that's left in this transaction is title and the appraisal. So as long as these two things are good, we're closing in 20 days. Who doesn't want to close faster? I do. Who doesn't want to get paid sooner? I do. Who doesn't want keys faster? Our clients do, right? Almost every one of them would want to be in the house sooner. Okay. Maybe the seller's not in that big of a rush to get out, but if they know if someone can get in there, why wouldn't they? Right? It's all got to make sense. And a lot of this makes tons of sense. All right. So I challenge you, as you're going through and just thinking of your past clients, just think of ways of trying to figure out their next solution, right? So if you got a past client, they may need to refinance, which opens the door to another conversation, right? Oh yeah, interest rates just went down. You should, contact Bill. Oh, and by the way, do you have anyone that's looking to purchase? Have you thought about upgrading your house yet? You've got some equity now. Maybe it's time to pull some cash out on a bridge loan, maybe buy another home. This becomes your rental, or let's buy your second home now, right? It's all in the conversations. If you haven't talked to your clients within the past 3 months, 2 months, these are great conversations to have, right? It's all about touching the client with some added value, right? We always say, what's your added value? I just gave you a whole bunch of them, right? I mean, the 1 buy down's enough for me to start thinking about buying another house. I'm glad to see rates are finally coming down. Awesome. Oh yeah, I probably do have 50 or 60,000 in equity. Oh, okay. Right? No one knows until you tell them, right? They don't teach us any of this information in school. So if you expect that or think that your clients are just as educated as you are, nowhere close to it. All right. I have these conversations every day, and our school system isn't overperforming in this area. I can tell you that. All right. So let's educate our clients. Let's revisit some past clients, and let's create some more opportunities between us. All right. That's all I've got. Um, thank you for your time. Having an awesome day, right? It's Friday, so enjoy your day. Um, if you got an open house, you need any marketing material or anything for the weekend, please contact me. I've got list reports, makes it super easy. Um, it allows me to engage with some of your clients, help get some of these clients moved over, give a second opinion, right? All kinds of different things that I can do on my side. I love talking to listing agents, especially when we're making offers, right? Because they're not aware that our offer's been already underwritten unless we explain it to them, right? So I'm here to always say how strong our buyer is over everybody else that's at the table. Okay. It's always a good saying. You always want to be the best looking at the dance. That's what we want to do. All right. And that's what we do with that verified approval letter. Okay. That's all I've got. If you need anything this weekend, my phone's always on. So text me, call me. It doesn't matter. 9 out of 10 times I'll answer unless, I'm in a scenario or already on the phone. If I can't answer right away, I'll definitely text you, let you know I'll get back to you in just a few minutes once I get done wrapping that piece up. Okay. So good luck to you. Um, get everyone vowed, right? Get everyone a verified approval letter so they're ready to purchase. We can close them sooner. Thank you guys. Have a great weekend. Talk to you soon. Bye bye.